Good morning, good afternoon. Depends on what part of the world you are tuning in from. Come in, hit the like, hit the share button, whether you are watching this live or on the replay. It is morning in my part of the world. So, hey, if it's morning for you, good morning. So, let's talk about this. I received a question and I wanted to answer it. Is now a good time to buy gold? Is now a good time to buy gold? And my answer to that question is both yes and no. It's both yes and no. This is why. Gold is a play for the rich and wealthy to store their wealth, to store their cash. They convert their cash into gold because gold is money and it is a hedge against inflation. What does that mean? Well, as you see higher prices, higher inflation, higher gas prices, higher grocery prices, right? Higher prices for goods and services, you're going to see gold move higher with the price of inflation as well. As gold by now is a little over $2,000 an ounce has hit. It is hitting an all-time high since 2019. So the answer to that part, if you have money sitting in a savings account or money market account, right? Then converting that cash into gold in order to keep up and even outpace the price of inflation and or the pace of inflation rather would be a good move. However, again, gold, storing gold, physical gold is what I'm talking about. I'm not referencing ETFs. Does not pay out interest. Let's keep that in mind. You do not get any interest bearing payment, and it is not an income producing asset. So, usually, for people that follow me and my followers, um, that may be living paycheck to paycheck, that may not have any money in a savings or any type of savings account, um, or you don't have thousands to put in gold to really make it worth your worthwhile, being that you can't, it's not an income producing asset, meaning that it does not pay out interest or any liquidity in cash. You have to sit on it and wait until it continues to appreciate in value. So it is a wealth play that's, in my opinion, a little similar to what a cash value life insurance policy could be used for, except with gold. Um, is not common, even though people do borrow against gold and silver, is not common knowledge to borrow against gold and silver to get other assets. However, people do that. They go to pawn shops, they get cash, they pawn their gold and silver against it, and they get the cash and they put their cash and other income producing assets that they will obtain interest off of it. Now, the dangers of doing that is if you default the debt, if you default the loan, if you're for some reason, if you put your cash into an income producing asset and it crashes, it takes a large dip, it wipes out 75% overnight or 50%, then your real asset, the gold and silver, is also gone away. That's the same thing as it relates to cryptocurrency. You want to be careful in taking out loans against your cryptocurrency, right? Because if that crypto takes a hard crash, a hard dive, excuse me, I had a cough. Let me cut my air conditioner off. If it crashes, which cryptocurrency is known for, it's very volatile. Not only do you lose the money that you put in that crypto up front, that you finance without the loan, but then you lose the loan itself, you lose the crypto, the money that you initially put in it to get the amount that you have. Because in order to qualify for a loan, decentralized financing in the crypto world, you have to have a certain amount of crypto already in your portfolio to have a loan against. So I tell people, do not ever use the strategy of taking out loans against your assets unless you have that amount in liquidity. That means you have that amount in your bank account. You have it stashed somewhere in liquidity that if the crypto market goes south, you can immediately, within 24 hours, pay off that loan so you can keep your original crypto investing. That's number one. For most six-figure income earners and the poor working class, investing in gold, again, is not a good financial move to make, in my opinion, right? If you don't have, just like a cash value life insurance, if you don't have 5 figures to put in there for a cash value life insurance to pump that policy, so within a month's time you can borrow against it, right? That's called giving the policy immediate um, pump, giving it immediate 3 to 4 figures over time. So now your portfolio has the amount that you need to be able to actually leverage cash and borrow against. And I also remember in the cash value life insurance that you are getting cash back, which is the lowest yielding asset that there is. So how much value is it really in cash right now? Right? As we're seeing, I'm seeing gas stations right now that are having new marquee signs installed to reflect double digit gas prices. Right? And so the only way a cash value life insurance, in my opinion, is valuable is that you have 5 to 6 figures to pump into it to give it immediate life. And then when you leverage, when you borrow against it, you don't go buy a car, right? You don't go borrow, you don't go buy, become your own bank and buy a car. You don't pay your bills with it. I took out, I know people that say they take out loans against cash value life insurance to pay bills. No, I mean, come on now. That you take the cash out and you convert it into income producing asset, real assets. Now, real estate is one of those assets it's called real estate for a reason, but real estate is still very highly overpriced, right? And with real estate, the residual, one of the benefits of real estate is residual income. However, you have to, just like cash value life insurance, you will have to put 5 to 6 figures in it just to probably residually cash flow on the positive end, $500 to $600 monthly, right? And that's with usually a 6 figure over 100K investment. That's called a good ROI, return on your investment. If you can cash flow, if you have over 100K loan for real estate to purchase a duplex or fourplex or etc., and if you cash flow $500 to $600 positive, that's considered a good ROI, return on your investment. So there is no deals right now where you're really finding those fourplex and duplex and things like that, triplex for even 100K. You're going to come out at least 200,000 to 250,000, and so most people don't have that type of funds. Less than 4 years ago, there was 1 out of 4 Americans had $400 for emergency savings that they could just go to for emergency. So what happens as we see inflation, which is a silent tax, and prices? What is the best option, in my opinion, where you can put your cash into things that are income producing assets? Well, you have decentralized cryptocurrency. Again, for my audience and my followers, real estate is out the deal, cash value life insurance is out the deal, and so is gold, because again, gold does not give you interest rate and is not an income producing asset. It is a store of value, which means it keeps your cash from depreciating and losing its purchasing power, right? It's a hedge against inflation, right? That's a game that the rich and wealthy play. But the middle class is often given that same advice, and that's not the same advice for the middle class. And so you look at decentralized, make sure it's decentralized cryptocurrencies, and make sure it's cryptocurrencies that are already in that class of being a commodity. I prefer income producing decentralized cryptocurrencies that are already in the asset class of being a commodity. The only two traditional cryptos that are deemed a commodity right now are Bitcoin and Ethereum. Nothing wrong with having Bitcoin, but again, if you're looking for ways to grow your money, Bitcoin is just like gold, physical gold, except it's digital. It's a hedge against inflation. Most poor working class and middle class really get into Bitcoin with the expectations of increasing or growing their cash, getting a higher return on their investment. And if you get in Bitcoin right now at $30,000 and you have very little to put in there, you're going to get a 2x, 3x return, which is not going to be very profitable to you if your strategy is to make your money grow at a rate that outpace or outgrow inflation, right? And so, what I believe is a bigger or a better play is to get in cryptocurrencies that are now pennies on a dollar, that act with the same likeness of Bitcoin and Ethereum, but that will give you a higher return. And this next bull run with cryptocurrencies, as we see, Bitcoin has done a great job, and Ethereum is now over a little over $2,000 because of the Shanghai upgrade that just happened on April 12th. Now, even Ethereum is not a really income producing asset. You look at Ethereum, Bitcoin, just like you would physical gold, as a means of a capital gains investment, increasing your money. But with all of those, when you cash out, you're going to be taxed out too, meaning that you're going to have a 30% tax applied from the GOV, from the FED, right, from the feds. And so now there's 30% of your growth taken away off the top. My question to you is whether would you want to be taxed on the seed or the harvest of a thing? Being taxed on the harvest is equal to being taxed on capital gains. Being taxed on the seed of a thing is equates or equals to being taxed on smaller liquidity withdrawals that you have the power to decide, okay, I want to take out 500 here, 1,000 here, 5,000 here, 10,000 here, and your money is still your initial investment, your initial purchase is still growing at the same time, right? And I always reference this in the Bible. The Bible gives that strategy in 2 Kings chapter 4. Elisha, and some say Elijah the prophet, gave the widow woman whose husband died and left the family in debt. I'm assuming he must didn't have cash, he didn't have life insurance policy, whether it's cash value or term, but he must didn't have a life insurance policy and left the family in debt. So he wasn't that that good at managing the family finances when he was alive, right? And the wife was left with, you know, her two sons, which are her legacy, and they were about to be sold into the slavery system. So, what is the slavery system? The slavery system is working a job, right? Nothing wrong with working a job. I work a job. That's not going to be my my goal to retire on the 40-40 plan, where I'm working 40 hours a week for 40 years, only to receive 40% of my pay in retirement. And we all know once you retirement, if once you retire, if the only thing you have paying you out is a pension or 401k, that is not enough to live off of to outpace inflation. It's not enough. Retirement money is never enough. That's why people retire and then they pick up second jobs, right? There's never enough money to retire off of. So you get 40% of the money you were making working, that alone doesn't make sense. Like you're only getting, and you work 40 years, 40 hours a week. Some people work surplus. So putting your money in income producing asset that you can liquidate and get taxed on the seed and not the harvest is was the solution in Second Kings chapter 4. And I believe it is the solutions now. To learn more about how you can do that, text CC to the number on the screen, 331-444-5556. These are decentralized cryptocurrencies that are backed by real world commodities. We all know that gold, silver, diamonds, oil, crude oil, pearls, things that have to be mined in the earth realm. And any precious metal is real wealth. It's not cash. It's not fiat currency. Fiat currency is another name for fake currency. Paper color money is not real wealth. So in order to get these perpetual income producing decentralized crypto commodity assets, text that number. Also, if you want to get tangible silver for under $35 an ounce, which should be very affordable to the middle class and the poor working class, you can go to milliemoves.com. That's my website, milliemoves.com. You can find silver there and copper, which are there's a global shortage, and the supply and demand will raise the price up. And in a bull run, silver and copper will outperform gold, right? It will outperform gold in the bull market. So that's it. I made it home, made it to my destination. Again, good morning, good afternoon, good night. It might be night in some parts of the world. Hit the like button. Make sure you are subscribed to me on YouTube. And again, to get your silver and copper, go to Millie Moves. And to get your income producing asset that you get daily interest on, right? And I'm not talking about 2 to 3% returns of interest. No, I'm not talking about 8 or 10% annually, right? I'm talking about as much as excuse you, I'm just messing with finagling my hair. I'm talking about as much as compound interest, what Albert Einstein considered the eighth wonder of the world. And he also went on to say that those who understand it get it. They get compound interest. They pay it. Those that do not understand compound interest pay it. You need to look at your mortgage if you're a home buyer. Look at the amortization interest on your mortgage. You take out a $200,000 loan, it does not matter if it's a 15 or 30-year mortgage. That's a myth. A 15-year mortgage, you will pay less interest, principal interest, but you're still gonna pay 2 to 4 times the amount of interest. A $200,000 house, you're going to pay back anywhere from approximately 150K to 200K in principal payments. It's called amortization interest. So if you don't understand compound interest, you're going to pay it out. If you understand it, it's going to get paid out to you. All right, 331-444-5556. Queen out.